Good morning, good afternoon, and good evening, and welcome to the Focus on Economy webinar series, jointly organized by FSDH Group and AFIG funds. The theme of our conference today is Nigeria, a New Beginning, and this is the first webinar which will be a part of a multi-webinar series focused on the economy. My name is Patrice Backer, and I'm the an Africa-focused private equity fund management company. We focus on African companies started by Africans and operating on the continent primarily. We target 32 countries across West, Central, and East Africa, but we do have some countries that we consider core countries, and Nigeria is one of them. It is a very important market for us. In Nigeria, we're invested in the insurance sector, in the banking sector, and we're very excited to have this collaboration with FSDH Merchant Bank. Today, Nigeria is once again at a crossroads, and we feel that it's important to take stock of where the country is. We think it's critical for us to understand what is happening in Nigeria, not only because of Nigeria, given our respective interests at AFIG funds and FSDH, but also because of the weight of Nigeria in the West African region, and indeed in the continent, as Nigeria is the largest economy in Africa today. We've structured this webinar to help you go understand how we're looking at the developments that are taking place. First, we'll have Barbara Burungi, who is a lead consultant for FSDH Research, and is a former economist for Nigeria at the African Development Bank. Barbara will take us through the macroeconomic trends and the new developments and their implications. We will then have Hakeem Mohammed, who is the head of global markets and prestige banking at FSDH. And Hakeem will basically walk us through the impact of some of these developments on the financial sector and the opportunities. Finally, we'll have Bukola Smith, who is the Chief Executive Officer of FSDH Merchant Bank, talk to us about the banking sector in general and how FSDH is positioned to assist clients, but also the general public in understanding what is going on and what are the opportunities. We will then have a couple of questions directed to them, and we will open it for Q&A. So at this stage, I would like to invite Barbara to please give us an overview of what is happening in Nigeria today.
Thank you, Patrice. If we could have the slides shared, please. Thank you. Thank you. All right, so we'll kick off this. Good afternoon, everyone. Good morning, depending on where you are. I'm dialing in from East Africa. We will start this, to kick off the conversation, I'd really like to just focus on what are the key macroeconomic challenges that Nigeria is currently facing. And the reason for doing this is so as to provide context for the three major policy reforms that have been announced by the newly elected President Bola Ahmed Tinubu. So the first, this slide shows you that Nigeria, like any other country in the world, has been affected by the global headwinds. Nigeria's GDP real growth rate has declined. It now stands at 2.3%, previously 3.5%. Nigeria's inflation rate continues to increase. Inflationary pressures, both globally and domestically, have led to this increase, and inflation is now at 22.4%. So basically double-digit inflation above what the central bank target of 6 to 9% is. If we look at the Nigeria's foreign reserves, the foreign reserves have been depleted and are declining steadily. What we now have as of June 22nd, 2023 is 34.4 billion. If we then look at, we thought it was useful to put in something on expenditures on petrol subsidy, given that this is one of the major reforms that we'll be discussing on an annual basis for about the last 3 years, and to enable you to look at it internationally in terms of figures. The country has been spending about 10 billion per annum on the fuel subsidy. Can we move on to the next slide, please? It's important as well to underscore that foreign investment inflows have been declining since 2020, and that's what these charts show. In particular, foreign direct investment has significantly dropped and is now at a historical low for the past 2 decades. We've also seen a decline in foreign portfolio investment. The main factors behind this is really a very difficult business environment, increased insecurity, and then of course, macroeconomic challenges, in particular, foreign exchange challenges. And this has therefore led to a weakened investment inflow. Against this backdrop, the newly elected government, which is hardly a month in power, announced 3 major policy reforms. The first was the removal of the fuel subsidy. The newly elected president, in his inaugural speech, announced the removal of the fuel subsidy. The second major announcement was that the foreign exchange policy was going to move towards a more market-determined rate, and a convergence of rates is what is now being implemented. So we have therefore seen that all the FX windows have collapsed into the investor and export window. This has led to a convergence between what we now call the official exchange rate and the parallel rate, and that is what that graph is showing you. There has obviously been very high level volatility since this announcement, where the Naira has literally been devalued from about 474 to the dollar to about 765 Naira to the dollar. A major challenge that will be faced and is already being faced is FX liquidity. Is there enough supply of foreign exchange in the market given this new exchange rate policy? Next slide. Final slide. So like I said in the opening, we have a fuel subsidy removal. That was the first policy pronouncement. We have FX reforms moving towards a more freely traded market determined rate. And then there has also been a change in the leadership of the central bank itself. All very good signals in terms of signaling to investors that Nigeria is now open for business on much better terms. But there are concerns. There are concerns in terms of to what extent would the FX be supplied? How much will this grow at a rate that the government and the central bank will be able to deal with some of the FX backlogs? To what extent can there be more clarity on whether the exchange rate policy at the moment is basically going to be sustained over a longer period of time, or will the central bank time and again intervene in the FX market? And obviously, as expected, we will hope to see that when the cabinet is announced, there will be much better coordination between the monetary authorities and the fiscal and trade policy authorities. And finally, an inclusive growth agenda is what is being expected. The removal of the fuel subsidy, in theory, implies that we now have savings of about 3 trillion Naira to then reallocate to programs of social welfare to cushion the more vulnerable groups from the effect of high inflation. I think I'll just stop there for now and then let my other colleagues. Thank you, Patrice. Over to you.
Thank you very much, Barbara. And before Hakeem starts his presentation, I just wanted to let the participants know that if you have any questions, please just click on the Q&A button and start, asking the questions, and we will take them up during the Q&A session. Akeem, over to you.
Okay, thanks, Patrice. Good morning, good afternoon, everyone. I would just like to pick up from where Barbara stopped. So these are we're seeing signs of excitement, given what we've seen with the new government. But it's probably still early days. But we're seeing signs. So, for example, this first subsidy removal that is expected to save around 6 trillion, in a year. If that happens, then sort of frees up government revenue for that developmental effort. So I'd just like to jump straight into some of the recent developments that we've seen and how these sort of impacts the financial markets. Like Barbara mentioned, we've seen a unification of the FX markets. The subsisting segments in the market, have all been collapsed into the investors and exporters window. The market now operates on a willing buyer, willing seller basis, unlike in the past where we've had distortions. There are different segments depending on the item you're trying to buy. And we expect that the unification should lead to improved liquidity and enable better price discovery mechanism to play in the market. We've also seen recently, last week Thursday, and we've also seen a bit more volatility in the currency, given what has happened, and we're beginning to see some flows come into the market. Now, liquidity is still, I must say that liquidity is still a challenge, but the central bank is supplying on one hand, and the market is also lobbying, the central bank, to allow some of the flows from the oil and gas companies, to come into the markets. But that way, we'll then see improved liquidity. As part of the unification of the markets, the NDF prices were also taken off the market. So we expect that at some point, the central bank would reintroduce that product, because it's a product that would then benefit investors and the corporate clients generally in the system, because it then allows them the opportunity to be able to hedge their exposure. The recent announcement brought about the introduction via willing seller are matched, similar to what we have today at the NGX. Although sincere apologies, I had connection issues. Okay, so I'm not quite sure where I stop, Patrice.
If you could just briefly summarize the slide, going through what you consider the most important developments, and then let's continue.
Okay. So thank you. So like I was saying, we've had some changes in the market. I was talking about the rebate scheme, which the CBN recently announced. So they announced an end to that scheme. Before now, they were using some of these schemes to encourage flows into the market. And the RT 200 in particular was a major strategy from the CBN as an incentive program aimed at pulling FX flows from non-oil exporters into the market. So it's at this stage, it's debatable whether these programs have been effective, but they've now been discontinued. So we also expect that so the CBN has also discontinued the arbitrary CR, which has been a challenge for the markets overall. We expect that in the coming weeks and months, that this is going to filter through the market, and we're also going to have we're going to see progress on that side. So the final point is the limits on interbank interest rates, that was in place, which has now been discontinued. We've also seen this impacting on the average overnight rate in the market, and we expect that for now this will probably continue to impact on the market. Next slide, please. Okay, so I'll just speak about two of these graphs here. Barbara sort of already mentioned some of this. We've seen the NIFEX sort of shoot up from 460 level to around 757, and last week, we saw it touch 815, which was a 15-year high. We expect to see more of this volatility in the coming weeks because the market is still trying to find this level. But at some point, once liquidity then sifts into the market, we'll then see, maybe the Naira appreciates, over time. So which is why this call that we're having is important. We're speaking to investors who are going to be able to come, we'll see the benefits in the system. But we do admit though that the yields in the market probably needs to improve. But again, I'm sure the authorities are looking at this, and over time we're going to see where how that pans out. So the final slide, which is just showing which is just like a summary of what we've seen in the markets, the different levels and the volumes that we're seeing. The volumes are still small, but I expect that in the coming days and weeks, it's going to get better. Thank you very much.
Thank you, Akeem. And now I'll turn it over to Bukola for the final presentation.
Thank you, and thank you, Patrice. Next slide, please. So we would like to just look at how all of this has impacted the markets, both local market and international market. So we've seen rising costs, and we see as an opportunity the need to support customers with additional working capital. A number of the customers, corporates, have had to close out or would need to close out their FX exposures. And we do see that a number of the corporates had actually benchmarked their pricing to their own official market. So that hopefully means that they will not have significant losses that they could possibly have had. Overall, we know that purchasing power of individuals have been weakened. And during this period, homes will find it quite challenging. Balance sheets across board have ballooned up, especially those that had exposures in foreign currency. And we do see that there will be some impact on banks in particular regarding capital. So capital adequacy will be challenged. Banks mostly had become dollar long. And so we expect that this impact would hopefully be minimal. Corporates who have major import requirements could also take a hit if they have been dollar short. We also do see that as a result of the low interest rates in the markets, funds will continue to flow into the stock markets. All of this, we think, do have some opportunities for both corporates, individuals, and foreign investors. Next slide, please. Like I mentioned, we see that the current FX stance, as explained by both Hakeem and Barbara, will be an opportunity for foreign investors. And how are we positioned at FSDH? So like Hakeem mentioned, under the global markets, we can support with FX trading. We do see and expect that at the central bank level, there will be opportunities for FX swaps, not only with the CBN, but with different counterparties. And as many as are looking into the market now, this possibly could be an opportunity for the swaps with the regulators. We also can support with hedges and structured solutions for customers' needs. And also for those that will be looking to bring in additional capital at this point in time, we can also support with that process of ensuring that you get your CCI, which is a capital certificates of capital importation. As you probably know, FSDH is a group, and within the group, we have different entities. So FSDH Capital is well positioned to support considering debt and equity capital markets, mergers and acquisition, shareholder exits, and security trading also in the stock market. And it will be something that we'll be happy to work with as many as are interested in this regard. We also recently launched our custody business. It's a global custody, which would also help investors safeguard assets and also with their various corporate actions. And I think that this and more are things that the FSDH group can support clients and potential customers with. As you heard from Barbara, we do have a very active research team that will constantly provide regular economic and market updates and insights. And we think that this is extremely important during this period where there's a lot of changes happening at very rapid levels. So And again, like Patrice had mentioned, in rounding up, this is the first of the series that we're going to have. We also have, next slide please, we have another event on the back of this next week, where we would also look again at additional changes that we expect to happen in the next couple of days. And we have subject matter experts that will take us through this. Thank you very much. I would hand over now to Patrice for questions. Thank you.
Great, thank you very much, Bukola. Thank you, Akeem. Thank you, Barbara. Questions are starting to roll in already, and so I'll take them up as they come. And the first question, and that's for all three of you, is what are the possible issues that could arise from the easing of trading restrictions on in the foreign exchange market? And also, do you think it will lead to increased foreign capital flows? I don't know who wants to take it.
Okay, so let me take it. I think yes, to the extent that one of the issues that foreign investors have had in Nigeria is really regarding the value of the naira. So there is that concern that because of the way the currency was been managed, that they're not getting good value for the dollars that they bring in. The other issue as well is also that if I bring my dollars in today, on the way out, is there going to be liquidity for me to be able to exit? I guess those are the two main issues, and I believe what is being done now, sort of then presents opportunity for for the investors. They know that when they are coming in, they are going to be selling at the right value, and on the way out, to the extent that the market liquidity is expected to improve, that they will be able to exit without a lot of hassle.
Okay, thank you.
Yes.
The second question is, what are the key indicators you need to see to believe that Nigeria's economy is heading in the right direction in the long term over the next several years?
I'll speak to that, but just to add to what Hakeem said, I think we need to be a bit cautious. One of the things that the current leadership or the newly acting leadership of the CBN is doing is trying to see how quickly they can clear the FX backlog. So I think a key signal really now to investors, particularly on this call, is that we're now seeing a willingness by the new administration to ensure that whatever backlog payments haven't been cleared are cleared. So that's an assurance that one would like to give. However, it will take time. Now, what signals in the long term would show that we are returning to macroeconomic stability? I think the first and foremost is to see that both the monetary and fiscal authorities are working in tandem. Of particular concern is the very high debt levels of Nigeria. In the long term, we expect that there will be a very clear strategy for debt restructuring, and that will be a good sign. Secondly, once the exchange rate stabilizes, our analysis shows that the rate could probably settle between 650 to 700, but probably on an optimistic note, 650. So the exchange rate needs to stabilize first before we really begin to see meaningful capital inflows. Of course, the control of inflation is another. It's basically all those key parameters and a growth in external reserves, but that would be very theoretical at this point in time. Thank you.
Thanks, Barbara. We see lots of questions, and I think one of the key concerns, obviously, is FX. So I will bunch up, I think there are 2 or 3 questions around basically the same concerns. Can you share insight into your expectations about the improvement of market liquidity with respect to FX? And I think a connected question is, Does the CBN have enough FX to meet the current or potential demand, including CCI-related remittances? And there's a comment that yields appear to be driven by liquidity as opposed to inflation and MPR. And I just wanted to get your thoughts on that.
Okay, so on liquidity, right? It's really difficult to call, but based on what we are seeing now, one of the issues that investors have complained about, is that control, that was in place at some point, right? Now with that out of the way, now we expect that liquidity will seep into the market gradually. In terms of when to expect liquidity to improve, I think it will all depend on how quickly the CBN is able to, to let go of some of the liquidity that, before now, I mean, before 2017, right? The IOCs, for example, used to sell into the interbank market. I believe that allowing those flows to come back into the market would greatly improve liquidity, in the market. Secondly, I also think that given some of the issues and the misalignments, that we've seen in the last couple of years, like Barbara mentioned, we need to see a better alignment of fiscal and monetary, policies as one way to be able to attract foreign investors again. Because as it is now, it's not clear, where we are headed. Removal of fuel subsidy clearly is a good thing, because that then means that some of the, call it 3, 4, 5, 6 trillion that the government would have had to borrow, from the markets. Maybe they won't do that again, or even if they're going to borrow, it won't be as high as, as these numbers that we've called out. I believe once we get better clarity around some of these factors, investors will be a bit more confident. I also think that, once the cabinet is formed, the government team would then need to, probably go on roadshows, speaking to investors and reassuring them that Nigeria is open for business and Nigeria is ready to work with them to achieve, their objectives.
So just to add to that, the president, for instance, last week was in France, also having conversations with investors and assuring them of that. One major part of the story has to be the improvement in the oil production. So as you probably know, we had challenges some months ago and over a couple of years where the production level had been low. But over the last 2 months, we've actually seen improvement in that regard. So we're hopeful that this is sustained. And if this is sustained, that then means that there will be, a lot more accretion to the reserves. And once that happens, then the CBN then has a better chance of meeting both the existing backlog and also then putting some more into the market. In conversations with the CBN, there is that willingness to actually clear the backlog. And there is some urgency around that. So we hope to see an improvement in market liquidity in the next couple of weeks. Thank you.
Thank you. Thanks. The developments in the FX market, of course, have been a big part of the story, but all of you have touched on the removal of the fuel subsidy as well. And I just wanted to pose a question that's been asked here, and I'll read it, is, will the removal of the fuel subsidy really result in availability of funds to redeploy for growth in the economy? Or are these funds the country didn't have in the first place, or an expense the country couldn't afford, thus just resulting in slower deterioration in the economy rather than growth opportunities? And a linked question, or I'll ask that as well, is the removal of the fuel subsidy by the federal government enough to drive down wastage in government fiscal activities? What other policy reforms are needed, if any?
Okay, Patrice, I'll jump into that. In reality, the removal of the fuel subsidy will not lead to additional resources for other developmental activities. Okay. One of the reasons why it became imperative to remove the fuel subsidy was Nigeria has gotten to such high level of debt that it is simply unsustainable. Okay. And yes, there are other measures other than just moving the fuel subsidies. The fuel subsidy, I think, makes a headline because it has been decades coming. The other measures is obviously looking at the cost of governance, and the president also referred to this in his inaugural speech, cutting down the cost of governance, cutting down on recurrent expenditure, in particular for government. There is nothing new to any of these suggested policy actions. I think the difference here is to wait and see, will government actually implement expenditure cuts across the board? Thank you.
Great. Any additional comments, Hakeem or Bukola?
None from me.
Okay.
Now from me.
All right. There are a couple more questions regarding the economy. What are some of the policies the central bank can adopt to tame the high and rising inflation, particularly as we're seeing some form of disinflation in other advanced countries?
Patrice, could you just, the first part of that question was lost. Could you just say that again?
Sure. What are some of the policies the central bank can adopt to tame the high and rising inflation, particularly as we're seeing some form of disinflation in other countries?
I mean, in the case of Nigeria, what the central bank is looking at in terms of taming inflation is really interest rate hikes. I think that the problem that we've faced is that there has been no transmission mechanism between the decisions that the MPC has made and the actual taming of inflation. I believe that the other policy that the central bank is now looking at is how does it engage with the main deposit banks to see what areas can they look at in terms of controlling or being more selective in controlling liquidity within the market, especially since using the OMO operation, open market operations, as a way of mopping up liquidity and reducing inflationary pressures may not be a policy that they would like to use over the long term. But currently, those are the two main discussions that are ongoing. Thanks.
Right. Barbara, just for the benefit of some of the participants, can you just explain briefly what OMO operations are? Or Hakeem?
I'm sorry, you keep cutting.
Sorry, I was asking if you could explain what the benefits, what OMO operations are for the benefit of the participants. Did you hear me? Hakeem?
Yes, I heard you.
Okay.
I suspect that Barbara is having connection issues. So open market operations is essentially a monetary policy tool that is available to the central bank to manage the amount of cash in the system. So they issue those bills when they want to mop up liquidity from the system, or there's also room for them to buy from the system if they need to inject liquidity into the system. And that has been a major tool for the central bank over the last couple of years. They've used that to essentially intervene in the market and manage level of interest rate in the system.
Thank you. There are a couple more FX questions, and then there are others in different areas. So I'll just close up the FX questions. Considering the current INE exchange rate, which appears to be the same with the parallel market rate, what should businesses expect in the short to medium term in terms of rates? Where do you foresee the rate by the end of the year?
So maybe Hakim is smiling, and it's a tough one to predict. But I did hear Barbara say somewhere around 650, 680. And I think that if you look at parity of the currency, etc., those are the kind of levels that we expect. But then a lot of it depends on liquidity. If there is liquidity in the system, then the currency should appreciate. And but if liquidity doesn't come in, then again, it will be a case of demand rushing to take in as much as you can get. So a lot of this depends on us seeing liquidity, and which is why we keep going back to CBN, providing some more additional funding into the INE market before we see other investors then approach the market. But all things being equal, we do think that somewhere around 650, 680 to the Naira, depending on the liquidity that we see.
Great, thanks. And do you believe, this is a continuation of the question, do you believe this is the right time for corporates to send in funds to the market, or should they delay a little bit for the market to settle down?
Hakim, do you want to take that?
Okay. Yes, to the extent that the market is still trying to find, to find its level, I think there's still some value now because based on what we're seeing now, there isn't a lot of liquidity. So we're touching new levels, every other day. However, and Barbara also sort of mentioned it earlier as well, that we expect that the currency will settle in the 650, 700, sort of range in the medium term. So to answer your question directly, yes, I do think that there are opportunities in the market now, given where the levels are, and that corporates will send in, their dollar flows into the market to stand to benefit.
Got it. Okay. Two questions that are similar. So I'll ask one because it also takes on the other. Dangote really recently launched his new crude oil refinery. How do you see this helping FX liquidity in the short to medium term?
Okay, so to the extent that right now Nigeria imports, all of it. I mean, most if not all of its refined products, PMS in particular. If you have a company, a local refinery in Nigeria, who is able to, to source for the crude locally, as well as sell locally. Now, apart from the savings around shipping costs, etc., it then depends on what sort of arrangement Dangote has, with the NNPC in terms of how does the company pay for the crude that they're going to be refining. From that perspective, it depends on what is being done. If it's paying in Naira on one hand and it's able to sell in Naira, then in the short to medium term, we expect that once the refinery starts to produce, we expect that there will be less pressure in the market to buy FX, because today the oil companies are selling to the central bank because central bank needs those flows to be able to pay for the imports done by the NNPC. Now, if this is taken out of the equation, then those dollars will then be available in the market for to fill other demand. Am I frozen?
No,
we heard you clearly.
No, we heard
Okay.
you clearly. We heard you clearly. Great, thank you. I think there are a couple of questions specifically about investors, or what are the asset class options under your custody business? Do you cater for people in the diaspora? And a related question is, what is your advice for any individual who has some cash and intends to invest today in Nigeria? Is it a good time to invest? Most importantly, investing in hard currency.
So yes, to your second question, investing in hard currency in Nigeria is a good option at this point in time. FSDH has a number of products that gives high yielding returns on dollar investments. On the bank level, we have a wealth management team, and we also do have, as a subsidiary of a holding company, an asset management company. So with both entities, we are able to provide good yields in foreign currency. And we can handle both from a retail small amount to a large amount. So anywhere in between, we do have an entity that can, provide good yields for dollar deposits. On the capital markets, we also do have FSDH Capital, who handles the stockbroking aspect of our business. And we do see the stock markets actually appreciating. A number of the entities in the stock markets are currently priced a bit lower than what their real valuation is. And we think that it brings up some opportunities for investors to be able to bring in money into that space and buy up some of those low yielding, low assets at this point in time. So yes, we think that now is a good time to invest both in foreign currency and also some investments in the stock market will make sense.
Okay, and the first part of the question.
Okay, custody.
Yeah, I think the participant was asking regarding the asset class option under custody. So we do have, so we're a SEC registered custodian, so we can hold both local currency and foreign currency assets on behalf of potential investors. And I think the other part of the question was asking about. Sorry, I'm trying to remember that. Yeah, so we can do that, and yes, so diaspora, yes, we can also hold assets on behalf of maybe Nigerians that are in diaspora who are interested in buying local assets in Nigeria.
And again, just to add that because it's custody, there's clear segregation of assets. So the custody business, there is a Chinese wall that separates the assets of the bank from the assets of these third parties. So yes, both for local and international investors, we are able to keep custody of those assets. So that's definitely an important point.
Thank you.
Thanks. Couple more questions. I think having to do, so one of them is an interesting question, and I'll piggyback another one on top of it. If the exchange rate is a demand supply matter, if we revert to the same FD
I think Patrice's connection.
Sorry, did you not hear me?
We lost you for a
No,
second.
we didn't.
Oh, okay, I'm sorry. I'll repeat. If the exchange rate is a demand supply matter, if we revert to the same FDI, FPI levels of 2013, 2014, and oil receipts bounce back to 2013 level, why shouldn't the Naira appreciate to 250, 350? Especially given the demand for FX should reduce with Dangote refinery. Okay, lots of ifs, but.
Okay, yeah. So let me attempt to answer that question. Yes, exchange rates is a demand and supply matter. However, because right now we have, so there are constraints generally in the system around the FX supply, right? If we do have significant FX supply and demand is curtailed in some way, we could see the currency, appreciate significantly from where it is now. Whether it will get to 250, 300, is not clear, but I mean, it's not completely impossible. But at the end of the day, which is why it was important that we have the sort of market that it is opening up now, where you have is free buyer, willing buyer, willing seller. You can go in there at some point. Once they will see liquidity, sufficient liquidity, we expect that the currency would appreciate. 815. Do we think 815 is the appropriate level? Maybe not. I mean, a few days ago, we're at 750. We saw it touch 815. Thursday last week. Can it appreciate for that? Yes. But whether it will get to 250, 300, again, it depends on what medium term is. So if we're really thinking, 7-10 years, and if all of the reforms that the government is trying to implement, if it goes through, then yes, why not? We could see currency appreciate significantly from where it is right now.
Great, thanks. And what more would be required to attract foreign investors?
Okay, so I think that that there are a couple of things that we first of all need to address, as a country. Investors need to be. I mean, there's been loss of confidence in the Nigerian system, and that needs to be addressed. At the highest level, the governments, and maybe when the ministers are formed, the cabinet is formed, and the ministers are in place, there'll need to be like a roadshow where a team from the government, speaks directly to a group of investors to reassure them, that, things have changed. We're looking at things differently now, and we're happy to, and we'll be willing and happy to support you, as you come into the country, because the markets, there's a lot of value, potential value in the market. Bukola mentioned earlier, that particularly because of the devaluation that just happened, in the number of stocks in Nigeria are actually very cheap, because if you convert some of the, so Zenith Bank, for example, is trading around 13 naira. If you convert that to dollars, right? Sorry, but that's a couple of cents. That's a very cheap stock, versus the value that Zenith Bank is creating on a day-to-day. And I believe that investors coming into this space will definitely be able to attract that kind of value. So I think, from the government side, they need to go out and reassure the investor community that Nigeria is ready and open for business, in order to be able to attract the FPIs. For FDIs, again, these are more long-term investors. We need to also look at some of the policies, coming out of the government, and see how government can better support industries and businesses to be able to thrive. And once those conditions are in place, I believe that investors are naturally going to chase after those opportunities.
So just to add, for the FPIs also, Hakeem had mentioned there needs to be some consideration around the interest rates. So if 1-year treasury bills are doing yields of about 9%, it's not very attractive to FPIs, who in other markets on the dollar, for instance, can get yields of about 5.5%. So while we know that the focus of the government would not be primarily FPIs, but they're still at this initial stage to still find a way to attract them. So some consideration around that would also help.
Understood. Thank you. Well, we have a few minutes left and the questions are still coming. There's a policy question that I find interesting. Is there anything the new administration is doing that may impact negatively or positively the free trade agreement, or are there any policy moves that provide any indication as to this administration's stance?
Sorry, I had a bit of a challenge with my connectivity. I think in terms of the free trade agreement, there were, as Bukola has mentioned, first and foremost, the current administration at the highest level is on some sort of a roadshow already. They were at the Paris Global meeting, and I believe they've now moved on to London. But there have also been side meetings with neighboring countries, Benin and others. And I think one of the issues that is being looked at is how do we align trade policy to ensure that intra-trade between various African countries is better facilitated. And what I find quite interesting about the president is that he has very strategically used the removal of the fuel subsidy to then begin to talk about free trade across borders. And the reason he's doing this is we perhaps should have also mentioned that the fuel subsidy itself was not only just benefiting Nigerians, some of the neighboring countries were also benefiting, particularly the smuggling of fuel across borders. So we're going to see Nigeria play a much, I think we're going to see this administration play a much more leading role in terms of the Africa Continental Free Trade Agreement. The details are yet to be elaborated, but also some of the advisors that have been appointed to advise on trade policies are quite solid performers in their past careers. So I think this is very much part of their agenda. That's all I'll say at this stage.
Thank you, Barbara.
So Nigeria as a leader in that regard is what the government would be looking at.
Thank you. I think we have time maybe for two more questions. What are the implications of the new FX policy on fixed income and money market investments in the short, medium, and long term?
Okay, so we expect that there's going to be more interest, but like I mentioned earlier, and I think the MD also just touched on that point now. The current levels, particularly for for treasury bills, and needs to improve before we start to see maybe interest, especially from abroad in that market. And on the for bonds, the rates are, I think the rates are okay. Maybe where they are now. We just need maybe a bit more clarity around what the FX policy is and the direction in order to be able to start to attract flows into the fixed income space. But we think that overall, I mean, one of the reasons why we haven't seen significant flows in the fixed income space, maybe the last few years, is really around the FX question. We still have a couple of investors whose funds are still stuck, in Nigeria, and we're hoping that under this new regime or this new policy, that some of these investors will be able to exit, and then then decide when to re-enter.
Thanks, Hakeem. And one last question is, historically, the CBN has scheduled meetings with foreign investors. Is that likely to happen soon?
Yes, it's likely to happen. I do know that something is being planned to go out there and have conversations with investors, because we know that it's just important that what is being implemented now needs to sort of be followed through with different actions and reassuring the investor community that when we give commitments, we are going to fulfill our side of the deal. So I do believe that, I mean, I'm aware that Central Bank is already planning to have some of those meetings with select investor groups.
Thank you. Before we wrap up, any parting comment from you, Bukola, Hakeem, Barbara?
Oh, sorry, Pat. There's a hand raised.
Oh.
And that's the DG of the Debt Management Office.
Sorry, 1 second. Make sure. Oh, I see. Okay. So let me just manage that. And so this is, for some reason, I see a hand raised, but I don't see. I see, okay.
My name is Patience Oniha.
Yes. Okay, got it. Please go ahead. Patience.
Okay, you can hear me now?
Yes, we can.
Yes.
Okay, thank you very much. And let me congratulate you for organizing this, and happy to reconnect with Barbara after a long time. The discussions have been very useful, but I just thought maybe one or two things that we need to highlight, and thank you for addressing some of the question I had asked earlier. I think one of the things, so Barbara did address one of the questions, but let me say further, it was on fuel subsidy. So the answer is right in the sense that it's not putting more money on the table, but certainly it leaves the budget as an expenditure item. So expenditure is more efficient, and the deficit in the budget hopefully is smaller, and then borrowing will be smaller. And I think we need to look at it that way. And in talking about the fuel subsidy and some other expenditure that the government incurs, one of the things I usually say is that what is it we can afford? The things government is paying for, can we really afford it without borrowing? So I think prioritizing expenditure, one of which is fuel subsidy, is one very positive step in that regards. What I found a bit missing from some of the discussions, since we sit on the macro side, I like to listen to the private sector because they are investors in our securities, whether local or international. With revenues, what the government desperately needs while looking at expenditure is revenues. So the unification of exchange rate is one immediate step to increase revenues available to all tiers of government. The government does earn revenues in dollars, whether from taxes or from oil that comes in through an NPC. So in addition to increasing reserves, clearly the FX due to the Federation, when converted to Naira, would be just larger. The same amount of foreign exchange would be larger. So there's more money for government to spend. And that is something the three tiers of government really have been clamoring for when they talk about exchange rate. It also means more revenue for the government to spend. And we should not ignore that one. It's an immediate step. But I think more broadly, and I decided also to speak about this because we tend not to want to look at that angle. We can operate at our present revenue levels and keep trying to incur the same expenditure and not expecting to borrow. Okay, so revenues have to grow. Each time the finance acts are passed, and there are new taxes included, we find that the public cries out. In reality, revenues have an implication directly on your budget and directly on your debt stock. So if we use the case of Angola, for instance, where oil price went over 100 and they were able to, produce within their OPEC quota, and I think in some cases above, they were able to practically, stop new borrowings, pay some of their debt. So revenue does a lot for a country. Not only does it help make your debt more sustainable, it may actually reduce your need for large amounts of borrowing. So we can't take away the need for more revenues. When those taxes and other things are increased, it is because we need the revenues to be able to hopefully going forward prioritize our expenditure. Speaking to the question around, debt has to be restructured. You can't talk about the debt without revenues. How much revenues are you earning as a percentage of GDP compared to other countries? And really using the standard benchmarks, what is the size of your debt stock to GDP compared to other countries? So there's a missing link there, that is revenues. But I think that point has been made severally in the past. What I just want to put on the table is when we say, oh, you restructure debt, it is not an immediate fix, and it comes with various other implications. So if we look at a number of countries in Africa who have been trying to restructure their debt for 2 years or thereabout, it hasn't really been closed out. And there are also new conditions being put into that equation. So I think we should look in-house. If we can generate more revenues, be more efficient and strategic about our expenditures, we probably would be in a good position on all parameters so that we can attract FDIs, which is really where we're going. Thank you.
Thank you, Ms. Oniha. I would like to mention that Ms. Oniha is the Director General of the Debt Management Office of the Federal Republic of Nigeria.
Okay.
Thanks.
Sorry, Patrice.
Yes, we've come to time. Unfortunately, I think, and there are many questions, but I wanted to give Bukola, Hakeem, if you have any, and Barbara, any parting comments before we close.
I think from me, it would just be to say thank you to everyone for attending. And like I mentioned earlier, we have a follow-on event next week. And it's a hybrid event that will start at 9 a.m. West African time. We are very much aware that that might not be very convenient for some people on this call today. So we will make the recording of that event available to everyone that has attended this today. Thank you.
Thanks.
Okay, so thank you everyone for joining. Just to say as well that the recording of this video is going to be shared, and if you do have questions, if there are some questions that we didn't answer, please do reach out to us, and I'm sure we're going to be able to provide you responses to those questions. Thank you very much.
And just one quick one to all the investors on the call. Despite all the macroeconomic challenges that Nigeria has, as someone that has worked on at least 30 African countries, Nigeria still remains a destination for investment. So at FSDH Research, we will continue to keep you updated. Feel free to get in touch with us, and as well check the website for our reports. Thank you.
Great. Well, thank you, everyone. Thank you, Barbara. Thank you, Hakeem. Thank you, Bukola, for your time and your insights. It was well appreciated. From our end at AFIG Funds, we do enjoy the partnership we've developed with FSDH over a few years now. And we're glad to have had this opportunity to organize this webinar with FSDH to talk about the current events in Nigeria, which is, as I said in my opening comment, is a very important market for us for several reasons, not the least of which is that we have investments in Nigeria, and in particular in FSDH. I want to thank all the attendees who've joined us today. The recording of this session will be made available, and also if the presentation by Barbara will be available if you're interested. Thank you again, and have a good rest of the morning, evening, or afternoon. Thank you very much, and until the next webinar, take care.